you asked the question of, define a bubble. Well, I would actually argue there are probably sort of three major characteristics, of which the first one is obviously looking at valuations. And, if we look at the valuations of NVIDIA, they, justifiably is actually very high indeed. I think a second sort of definition of a bubble is look at investor positioning. Whenever you have a market bubble, investors are very clustered or very concentrated, yes, either in one market or in one sector. And it doesn't matter whether you look at the US or Europe or some of the Asian markets. We've got this historic wide valuation between the tech sector and obviously AI as a subsector of the tech sector and the rest of the market. And a classic example of that is Europe. So if Europe, we look at a price-earnings ratio of around 13, 14, the value index in Europe is actually down at about 8. It is super cheap.
Yeah.
In the US, the tech sector is valued on a PE of close to 30, and obviously NVIDIA is much higher than that. But if you look at the S&P as a whole, it's just above 20. Yes. That's high, but... and investors are very clustered in that tech sector.
So what does that mean, Bob, in terms of, A, is the bubble going to be pricked in those concentrations, yes, of investors and their holdings? And B, if it is, what's going to be the catalyst? And C, I've asked you 3 in 1, is that, what happens to that rest of the market that isn't overvalued?
Right. We didn't mention the third definition of a bubble. Yeah. So it is basically valuation, investor clustering, and then if you look at the bubbles in 1999, 2000, and then in 2007, one key characteristic of the bubble was investor leverage. And we had, whether it was retail investors or institutional investors, a very high level of leverage. And that was either through borrowings or it was through derivatives. And obviously one of the problems in 2007 was that those derivative positions were in many cases very opaque, and you remember of, the trying to define the risk management of CDOs, CBOs, and CLOs, and it was very, the bottom line was very simple. It was just embedded leverage. So, coming back to your question, what are the catalysts for a problem? And I don't think you're going to see a major market reversal like we saw in 2000 or like we saw in 2008, and the main reason for that is that investors don't actually have much leverage. And actually, if you look at investor cash positions, positions in money market funds, positions in corporate and investor liquidity, the cash positions sitting on the side are very high. So we're still looking at a situation where there is a wall of money sitting on the side. So to answer your question, is there a bubble? And my answer is, there is initial evidence, but we're not in the very stretched positions that we saw in 2007. Will that bubble get burst? Will it reverse dramatically? And my answer to that is no. But you will see, to come back to the answer to your question, I think you're going to see investor rotation out of the very stretched positions where investors are very concentrated, more into the broader market. So if you look at the States, will the Russell 2000 over the next 3 to 6 months outperform, the NASDAQ computer index? Yes, I think it probably will. And that will be a function of this investor broadening out.
Right. Bob, I want to go back to the second point, I think, now that you've also just made in this one, which is just with regards to whether that, that aspect of what could be looked at as a bubble by some, whether it could be pricked. And I just point back to just Alphabet very recently. Question marks have been pointed towards its AI and maybe missteps there. If something like that gets seen wholesale for a whole host of entities that initially looked like they had great AI investments and thoughts, and that isn't the case.
Well, I completely agree with you. And and if you look at where are markets vulnerable at the moment, it is where the valuations are very stretched, where there is a lot of good news discounted in the valuation price, and obviously, there is a lot of media talk about AI, a lot of investor following, AI trends. If that is disappointed, then companies obviously are vulnerable to a setback, particularly when investors are very clustered or very concentrated in that position.